Hey there, friends. My name is Jim, and today I'd like to talk to you a little bit about banking. So, I'll start with a quote because that's what all the smart people do. George Santayana said that those who do not remember the past are doomed to repeat it. As I'm sure you know, kind of ironically, that quote's been attributed to several different people, both before and after Santayana's death, so who knows where it actually came from, but that's kind of the point. So, today I want to tell you a little bit of a story. I know the beginning and the middle parts of the story, but the end has yet to be written. Stories about money and a bunch of people who just could not stop repeating the past. So, a long time ago, metal was money. There was no paper currency, it was only metals. Holding all your wealth in metal in one place could be pretty dangerous, and banking was born as a business to hold and protect the metal on behalf of others. You'd take physical metal to a bank so that it would be safe, and the bank would take a blank piece of paper and write you a receipt for the metal. When you wanted the metal back to buy things, you'd bring the receipt and they would exchange it for your stored metal. Pretty simple system. Over time, the receipts became trustworthy, and the banks became trustworthy institutions. So people began to exchange the receipts between themselves as payment instead of the physical metal, because they were confident that whenever they wanted, they could just go to the bank and exchange their receipts for the metal. This meant, again, as the bank's trustworthiness grew, less and less metal was being withdrawn from the bank on a day-to-day basis. It was just sitting there, backing the receipts at a 1-to-1 ratio. What that means is, for every receipt, there's, say I have 50 pounds of metal, there was 50 pounds of metal in that vault. Then, over time, the bank slowly realized that most of the metal that was left with them wasn't being withdrawn because people were okay with just trading the receipts for goods and services. They learned that they could loan out metal that had been deposited for profit, while still having enough left over to give out to the few people who actually wanted to lug around their gold or silver or whatever. This practice became known as fractional reserve lending, because they only keep a fraction of the metal that they lent out in their vaults or in their reserves. So as soon as fractional reserve banking began, you have an instant and immediate increase in the money supply without increasing the amount of metal the bank was actually physically holding. Banks could lend out receipts for metal as loans at whatever ratio they wanted, so as long as they could handle the small number of people who would come in to withdraw their own physical metal, they'd be fine. So effectively, they didn't change the value of the metal, but they did change what the receipts were backed by. Before, they were backed by the exact amount of metal that they were given for, and after, they were backed by the confidence that you could get your metal out if you needed to. Now, being backed by that confidence is a very important thing to remember. There's a difference between the money being backed by physical metal and the money being backed by the confidence that somebody could go get metal for these receipts. So, this went on for some time pretty well, but eventually people got scared. They went to the banks and took out all the metal they had just in case things went south, so that they knew they would be okay. Once one person did this, another person followed suit, then another and another. Eventually they couldn't satisfy the receipts because they only kept a fraction of what they lended out in their reserves. Once the bank was out of money, it went out of business, and anyone who was late to get their metal out lost everything. There's an example of this in It's a Wonderful Life, the Christmas movie, obviously. This led to people naturally being scared to put their money in the bank, so they wouldn't give up their metal anymore, and banks couldn't just create money out of nothing, and the whole party kind of ended. Banks couldn't create any more magic money because people had lost the confidence in them, so their metal receipts weren't backed by nothing. So, now this was actually bad for society, depending on your point of view. When the banks were able to create new receipts and lend them out, it didn't just make that one bag money. Everyone benefited because it helped people build businesses or buy houses or whatever they wanted to do, but lacked funding for. Without fractional reserve banking, there would be no loans from banks because they'd have to keep all the metal inside to assure that if everyone came to claim their metal at once, they could satisfy that demand. They couldn't lend out an amount and keep a fraction. So this is when the government stepped in. As usual, of course, the government comes in to fix everything. They knew it was important for their nation to have a strong economy, so they put rules on banks to stop them from having these problems and rebuild the confidence that had been lost. They put rules on how many loans and receipts a bank could issue, and they set the reserve rate at like 2-to-1 or 3-to-1. which is much safer than having a 10 to 1 or an infinity to 1 or no reserve. Government made different promises to the citizens that the government would make sure that banks always had enough metal. So slowly people started to regain confidence in the system and began bringing their metal back to the banks. As the confidence power grew, government allowed banks to hold less and less metal for each loan they gave out. They lowered the reserve requirements from 2 to 1 to 3 to 1, all the way to 10 to 1, and even further than that. The lower the reserve requirements became, the more loans the banks could make, and the more business they could be built up using those loans. The confidence power grew so high that almost no one was taking metal out of their banks anymore. All the business was done using these banks' paper receipts. The biggest problem then became making sure these receipts were actually genuine to prevent fraud, so the governments decided to make their own receipts so that all the receipts in one nation looked the same and were easy to differentiate. This made trading even faster and more streamlined than ever before, and the metal still existed and was still a very important factor in the entire monetary system, but almost all of it sat unused in people's accounts, and nobody touched it anymore. Eventually the governments became worried. They remembered what happened before and knew it was dangerous not to have the same amount of metal in their vaults as they lent out in receipts. So, at a time when there was more confidence than ever, the government went ahead and took all the metal from the banks. The government promised the citizens to keep the metal safe for them, so long as citizens would keep trading the receipts that the government made. The metal was still there in the government vaults, but no one could touch it anymore. It's there, money's backed by it, but you don't get to take it out. So the governments continued to set the rules about how much banks could loan, and governments continued to print the receipts for everyone to use. At first, the governments promised that the receipts were good for as much metal as they represented at a 1-to-1 ratio. But as the years and decades went on, confidence power in the paper continued to grow, and people started to forget that the actual money was the metal, and not the paper that was only a representation of that. Governments started to get greedy and started telling people that their receipts were only good for part of the metal that they showed. It was first like a half, and then a third, and then a quarter, and so on. But by this time, most people had never even seen the metal of their paper represented, so this didn't really trouble them. They continued to trade these paper receipts as if the paper itself was the money. Slowly, governments began to claim that the paper itself was the money. The government said that the paper was money so many times and so long that everybody believed it, and thus it became true. And slowly, even the government forgot the rules of their money magic. Even the most conspiratorial among us has to remember the government's made of people, and these people had been primed from birth and taught from birth that paper was money. Unfortunately, that meant that the people in government kind of thought they could just print as much as they wanted and there would be no repercussions for that, and some governments did exactly that. But when people saw governments printing this insane amount of money, they started to lose confidence in it again. There can't possibly be that much metal backing up that money. That is what we call hyperinflation. The confidence was gone, and nobody wanted the paper money anymore, so they put their confidence back into things that they held and could control, like food or metal that they actually had. Governments didn't like this, for obvious reasons. They'd gain an unprecedented amount of power over people by controlling the monetary supply, and they did not want to lose that power. It was easy for governments to make money by taxing people on the paper money, but it was much harder to tax things that people bartered, like food and metal. I mean, here, I want 10% of your pig, or whatever. I guess it would work, but you'd have to do it differently for every different form of barter. It just wouldn't work. So, first, governments tried to scare people into giving them their confidence back. They did it with guns and laws, and it did scare people, but it didn't give people confidence in the paper again, obviously. The governments learned that confidence can't be forced or stolen. It must be given freely. So the government started to make promises. They promised that the paper money would be controlled again, that it would be backed either by metal or by other currencies that hadn't been hyperinflated. What actually happened was the United States agreed to have their money backed by gold, and then every other country would have their money backed by the United States dollar, so that everything would be linked to gold in at least a couple of different steps. So, these promises worked because people had confidence in metal, and slowly the people began to give the confidence back to the government again, and their paper. It was just more convenient that way. Again, the years and decades went on, and again, people began to forget that the paper was not real money, and confidence continued to grow. This time, the government realized that they would lose confidence if they started just printing money willy-nilly all at once, so they got a little sneaky about it. The government started to print eensy little bits every day, and every month, and every year, and they hid it and spread it around so that people wouldn't notice what they're doing. And when one or two people did notice, the governments told them, don't worry, this is how we've always done it. This is how it works. Everything's okay. And the confidence level was super high, and the printing was super small, so people believed the governments generally, except for a couple of crackpots who went around warning people. So the years and decades went on again, and the governments printed, and people started to notice. The main way they did is they saw that the money they had this year couldn't go as far as money they had last year. They could buy a certain amount of clothes and food last year with X amount of money. Next year comes, they can't buy the same amount of clothes and foods. However, the governments are crafty, and they promised the people that everything was okay, and they said as long as people had confidence to use the money, then everything would be fine. Once again, the years and decades went on, and people and governments believed in the paper money. And the people in the governments forgot the rules of money magic and forgot that the metal was the real money. And people began to believe the governments could print all the money they wanted, and governments began to believe that they could print all the money that they wanted. And the governments began to print more. And they printed, and they printed, and they printed. Once again, little by little, confidence began to go away. Wonder where the story goes from here. Anyways, guys, I hope you enjoyed that. Please share this video, click the link, copy it, send it to a friend, give a couple views. It's very important that we all understand the way that our money works, and it's kind of important that we all get that this is all just a jumbly game that we've been playing for decades and centuries, and it always leads to the same place. Anyways, guys, you have a wonderful day. I was glad to see you. Like, share, and subscribe. Comment below, and have a wonderful day.